let's forget those old stories about people mining crypto in their basements, okay? Today, we're going to look at crypto mining for what it really is, a serious investment opportunity. It's a world of strategy, risk, and yeah, huge potential, but only if you know how to play the game. So let's get into it.
So, you're thinking about jumping in. This question seems pretty simple, right? But the answer? Well, that's a whole different story. This isn't just about flicking a switch on a machine. It's about building a real business from the ground up.
And this right here is where it all begins. Every single successful mining operation starts with one single fundamental choice. And that one decision is going to determine your entire path. It shapes everything that comes after, from your costs and your risks to your potential rewards.
All right, here's our roadmap for today. We're going to kick things off with the 3 main ways you can get into mining. Then we'll dive into the nitty-gritty of planning your investment. After that, we'll look at how to keep your whole operation running like a well-oiled machine. And we'll wrap it all up with what's probably the most important part, how you actually secure the crypto you've earned.
So let's get right into that first big choice. See, there's no single right way to mine. There are really 3 very different paths, and each one comes with its own rulebook and its own rewards.
This table really lays it all out. Think of solo mining like buying a lottery ticket. I mean, the payout is massive if you win, but let's be real, the odds are incredibly slim. On the total opposite end, you've got cloud mining. It's super easy to get started because you're just renting hardware. The catch? The returns are lower, and you're basically putting all your trust in somebody else. That's why for most serious investors, the mining pool is the sweet spot. You team up with other miners, which means you get more frequent, more predictable payouts, even after you pay that small pool fee.
Now, the engine that's driving all of this is what we call hash power, or hash rate. Just think of it as your computational horsepower. It's the number of guesses your hardware can make every single second to solve that crypto puzzle. So when you're in a mining pool, the more hash rate you bring to the table, the bigger your slice of the rewards. It is the single most important metric for your entire operation.
Okay, so once you've picked your path, it's time to actually draw up the blueprint. This is where you go from just having an idea to actually making it happen. And let me tell you, careful financial planning is everything. The end goal here, obviously, is a positive return on investment, your ROI. Every single dollar you pour into hardware, electricity, and fees has to be weighed against what you can realistically earn. This isn't just some business school metric, it's the fundamental question your entire operation has to answer. Is this thing actually profitable?
So how in the world do you figure out your potential ROI? Well, you have to run a serious feasibility study. You have to model your energy costs, which, by the way, are usually your biggest expense and can absolutely make or break you. You've got to weigh the hardware's performance against its price tag. But here's the tricky part. You also have to account for things you can't control, like wild market swings, changes in network difficulty, and even massive events like the Bitcoin halving, which literally cuts the mining reward in half overnight.
And at the very heart of that hardware calculation is this thing, the ASIC miner. Now, this is not your regular computer. An ASIC is built for one job and one job only, mining crypto as efficiently as humanly possible. It's like a Formula One car, designed for just one track. The whole game is finding the perfect balance between how much power it sucks up, its hash rate, and what it costs you up front.
All right, you're all set up. You might think the hard part's over, but not even close. A mining rig is not a set-it-and-forget-it kind of deal. It's an active operation that demands constant attention if you want to stay in the green. This is a little window into the day-to-day reality. You're going to be constantly monitoring your machines from afar, checking their performance, checking their temperature, because heat is the absolute enemy of mining hardware. You need a rock-solid plan for troubleshooting to keep downtime to a minimum. And you've got to be ready to adapt on the fly. Maybe you'll overclock your machines to get more hash power when prices are up, or underclock them to save on that all-important power bill when the margins get a little tight.
You've put in the work, you've earned the rewards. So now what? This last stage is, you could argue, the most critical of all, making sure your hard-earned digital assets actually stay yours.
And the undisputed gold standard for security is self-custody. All this means is that you, and only you, control the private keys to your crypto. You're not trusting an exchange, you're not trusting some third-party service. When you take self-custody, you basically eliminate the risk of someone else losing, freezing, or straight up stealing your assets.
So how do you pull this off? The path is actually pretty clear. First, you get yourself a hardware wallet. This takes your private keys completely offline, away from hackers. For another serious layer of security, you can set up what's called a multi-signature or multi-sig wallet. This just means you need more than one key to approve any transaction. It all boils down to one simple, powerful idea. You are your own bank, and protecting your keys is job number one.
And hey, one final crucial reminder here. Being your own bank also means you have to be compliant. You absolutely have to understand the local tax laws and the rules around mining revenue where you live. This isn't the fun part, I know, but it's a critical piece of running a legitimate long-term operation.
You know, this quote really sums up the entire philosophy. Mining successfully is all about building a clear, optimized strategy that covers everything from your hardware choice all the way to your security plan. It's that total approach that gives you the confidence to actually operate in what is, let's face it, a pretty complex and exciting space. So the real takeaway here is this. Crypto mining is so much more than just powerful hardware. It's a strategic game of managing resources, calculating risk, and constantly optimizing your approach. Now that you've seen the blueprint, the only question left is, what's your first move going to be?